Okay, so we have some stability in the Bitcoin price because Trump didn't actually invade Iran yesterday and they weren't actually drawn into the war. And so now you've got the Bitcoin price at 106,395, and then you've got the oil price below below the war line again, as I'm calling it. But my guest today, Gareth Soloway, he says that even though this is the case, there's still a lot of uncertainty, and actually the charts are actually painting a very interesting story. And what I want to do is I want to go through those charts. When I saw these charts, I must say, they absolutely blew my mind. And I think when you see these charts, they're going to blow your mind. So you want to watch, and specifically, you want to watch the last chart that we do on the day today, because that's the one that was the one that really blew me away. So listen, if that sounds good to you, Friday banter it is. Gareth Soloway here with us. Let's get the show on the road, guys. You know, we haven't had Gareth here for a while because he streams more or less the same time we stream, and so it's very hard to get him on, but I managed to actually get him on. And I'll tell you, the chart that he showed me today was absolutely blew my mind, and I really think you guys want to see this chart. You want to see the crypto charts, you want to see the other charts, the S&P charts, the gold charts, the silver charts, and a whole lot of other macroeconomic factors that we're actually covering. But before we do that, guys, I don't know if you guys saw this. This was really, really scary, and I think it's important that I bring it to your attention now. So for those of you who didn't see this yesterday, the biggest data hack in history actually happened. And when I say the biggest data hack in history, this one's actually very, very, very scary. 16 billion Apple, Facebook, and Google passwords were leaked. Now, this is not only Apple, Facebook, and Google passwords, but it's actually a whole lot of logins, credentials. It says here, the story was originally published on June 18 and been updated with comment from the founders of 𝗙Persecurity regarding the 16 billion leaked passwords and other login credentials across major tech vendors, right? That is absolutely, absolutely, absolutely crazy. Which means that if you've used any of these platforms, Apple, Facebook, Google, you need to change your passwords immediately. And if you use those passwords with any other platforms, like your exchanges or anything else, change all of those passwords, because those passwords are all available on the dark web. They're all linked to your IP address. They're all linked to your profile. They're all linked to your email address. And the problem is that now these hackers can actually have a field day. So you have to be vigilant now. This is the time to be vigilant. Step number 1, change all your passwords. Because if you use similar passwords, change those passwords. Step number 2, get yourself a VPN. I keep saying it to you guys. I don't know how else to say it to you guys. You need to get yourself a VPN. Why? Because a VPN masks your IP address. You see, like right now, the hackers know my IP address. They know my usernames. They know my passwords, and they can effectively hack any system. For $2 or $3 a month with a money back guarantee, you can hide your IP address, and that gives them one less data point on you. I cannot stress to you how stressed I am about this. And what this is actually going to bring. Also, you should consider taking out the other two things, which is Threat Protect and 𝗏𝗏𝗏, because what NordVPN 𝗏𝗏𝗏 does is it actually removes you off these databases. Now your personal information, if you were hacked, and out of the potential 16 billion people or 16 billion passwords that were hacked, chances are you are there. You need to remove yourself from all these spam databases and stuff like that so that you don't actually get scammed. Today's the day where I'm telling you, go and get yourself a NordVPN, a Threat Protect, and an 𝗏𝗏𝗏𝗏. It'll cost you $10 a month. And now you see what the risks absolutely are. And if you don't want to do that, then please, just for the life of me, please change your passwords and put 2-factor authentication on everything, because this is a very, 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 very serious hack. All right, with that out the way, I want to get into markets, and specifically, we're living in a very, very volatile time. We've got markets up, we've got Bitcoin up, we've got oil up, we've got S&P near all-time highs, and there's a hell of a lot of volatility, and we need to make sense of it all. I want to bring Gareth onto the show. Gareth, nice to see you, my friend.
Oh, it's so good to see you, Ran. Thanks for having me back.
Amazing. Listen, I know that you're pressed for time, but I really want to get the alpha out of you. So let's get into the charts, and I want to really try and understand your base case. You've got a looming war in the background. You've got this Israel-Iran war. You've got oil, which is looking something like that. You've got the trend line on oil about to be broken to the upside potentially, or maybe get rejected. I'm keen to hear what you're looking at the moment.
Yeah, so there's no doubt about it. There's so many possibilities that could be negatives out there. Yet we see the S&P basically holding near all-time highs or just below. But there are warning signs in the charts, and the first warning sign I want to show you right here is the S&P 500. So since the April lows, we've been kind of grinding higher in what we would refer to as a wedge pattern in technical analysis. Just in the last few days, we've broken below that wedge pattern. So that to me is a signal that the markets are more vulnerable now than they were a week, 2 weeks, 3 weeks ago. The uptrend may be on the verge of breaking or may have already broken. But you're right. I mean, you have the tariff deadlines, you have Israel and Iran's conflict. The US may join in, we've heard. You have all of these other issues, and even you have the Federal Reserve that just came out, yesterday and basically said, "Hey, we're going to up our forecast for inflation, but also lower our forecast for growth," which is AKA stagflation, right? So all of these things are really putting pressure on investors, which have been buying the dip up till now. But will that continue?
So when I listened to the FOMC, I must admit, I really thought it was a nothing burger. I thought it was like, there's nothing really going on here. In my head, I was driving home after the stream and I was like, hold on, that wasn't a nothing burger. And I'll tell you why I don't think that was such a nothing burger. The first thing is the Fed officials are themselves undecided as to whether we're going to get interest rate cuts. So you've got 7 of them saying no interest rate cuts between now and the end of the year. And then 8 of them saying that there's going to be 2 interest rate cuts. That's that's one camp saying no interest rate cuts this year. Another camp with an ever so small margin of one person saying that there's going to be interest rate cuts. So that was the first thing for me. Markets don't like uncertainty. And the scariest uncertainty for me is when the Fed officials are themselves uncertain. That's scary for me. Second thing is, as you say, their new base case is actually stagflation. It's high inflation and low growth and high unemployment. That's their base case scenario. And what I said yesterday in my show is I said, I'm worried that, if you go to a doctor and the doctor says, look, I'm treating you now and I'm going to treat you to a point where you're going to get to a point where none of the treatments that I have in my arsenal can fix you. Like when you got stagflation, you can't reduce interest rates, because if you reduce interest rates, you're going to spike up inflation. You don't have tools in your arsenal. And so what I'm worried about right now is that the Fed is basically telling us we're driving you to a point where we believe that we're going to hit stagflation. And that to me is like scary.
No, it is. And that's the fact that that's their base case. It's not like, oh, there's a 10%, 20% chance of this. No, it's like basically over 50% chance that we're going to see this. And again, then you have Trump on one side who's bashing Powell and saying he needs to cut by 200 basis points. I think he said that yesterday after the Fed made their statement. So these are all things that, again, create more uncertainty, yet the markets, again, have rallied up. And what I've always said about the stock market in particular, is that things are fine until they're not. And what that means is that investors will buy until they see specific things that panic them. And for me, at least, that's actual data, right? So we've heard about tariffs for now the last couple months. I mean, it's kind of almost become like, oh, okay, it's just more chatter on tariffs. But what's been sticking around? The jobs data has been staying okay. Now, I say okay because we're still seeing weakness, right? Participation rate falling. We're seeing the jobs numbers being revised down every month, but the headline numbers are still showing that people are adding jobs. The question is, at what point does that change? And that, to me, is where markets go into panic, because then all of a sudden, it's not like, oh, the economy's okay and we have stagflation. It's like, no, the economy is going south fast and you have rising inflation, which again is the worst of all scenarios.
Let's just before we end FOMC talk, if you were Powell, you're sitting as Powell, you've got inflation at 2.4%. You wanted at 2%. You've got unemployment where it is today. You've got tariffs or potential tariffs coming back. What do you do? What's your move?
So for me, if I was Powell, I'd be staying pat. I would not do anything, and I'll say why. So you need to find out what the tariff scenario is going to be, because there is going to be an inflationary pressure due to tariffs. The question is, how high do they ultimately become? Does Trump back off? Does he push these tariffs higher? Does it stay at 10%? What does it do? Once you have that clarity, then you can probably factor in how high inflation might go and decide, okay, can we do a couple interest rate cuts. But what investors need to understand is the Fed cannot do what it used to do, which is drive interest rates to almost zero. That cannot be done anymore. The inflation pressures will bubble up, and we will see massive hardships amongst a lot of Americans and really globally as well.
All right, let's jump into another topic, and that is that remember that the markets have been at calm. If I look at if I look at the markets, so I look at the markets here. That's the S&P. That's when the first talk of tariff started. That's the bottom of the range where the 90-day tariff pause was effectively introduced, right? So I just want to show you the timing. That's when the first tariff announcement was. And then you had the 90-day tariff pause, which took place on April 9th, which is exactly the turning point over here, April 9th, turning point over here. And now we're going back up. The 9th of July is the deadline for the 90-day tariff pause for them to announce trade deals, because they said there were a bunch of countries lining up to do trade deals with them. Problem is, we haven't had any trade deals announced yet. So EU and Japan are saying that the Americans are being too tough. Trump says he's negotiating deals with 200 deals, but he's not saying with whom. So what happens if we arrive at the 9th of July and we don't have as many trade deals as we want, and then Trump starts talking about tariffs again?
Yeah, so my guess is what's going to end up happening is that he will postpone and introduce another 30-day pause on tariffs. He'll probably say something like, we're negotiating, so as long as these countries are willing to negotiate, we will extend that out. And I'm not saying that that's actually what's happening behind the scenes. It could be that these discussions are dead, right? I mean, for all we know, they're not even going on. But he has to play it out like that's the reason why he's giving another pause. Now, what's interesting is we saw that big decline in early April, because people got surprised. They thought there was a Trump put out there, right? We all thought from the last administration when he was president that he cared about the stock market. And then all of a sudden he said, nope, we're going hardcore on tariffs. The stock market collapsed. We saw the treasuries yields were jumping, which was super unusual, right? That was the first sign that foreign governments were like, you know what? You're going to play this hard game with us, this hard ball. We're not going to buy your debt. See what happens then. And we saw yields jumping up. That pushed Trump to back off. I think he is focused on the stock market, and I still think he cares enough where he won't let us go back into that free fall. My fear is that it's ultimately not going to matter, right? We are seeing the dollar being accumulated less by foreign governments. We're seeing treasuries. People are shying away from treasuries, and we are seeing that, again, foreign countries are now starting to think twice about doing the same level of investment in the U.S. And these are all things that spell trouble over the next 3, 5, 10 years.
All right. So let me ask you a question. How are you looking at the markets right now? Like closer to a top, closer to a bottom. Maybe let's put up some of your charts. Let's actually get into your analysis, into the nitty gritties here. There it is over there.
Yep. Yeah, so for me, there's always a chance that we could go up and make a new all-time high. I think it would be short-lived, though, and I'll tell you why. So the markets have a tendency to say, oh, let's get the most people on the wrong side of the trade before we roll over. So we have broken the wedge pattern, which is bearish. Could we just quickly dip up, pierce the all-time highs? What happens when we pierce all-time highs? The mainstream media comes out with their pom-poms. They're jumping up and down. What is that impact on human psychology of investors? It's to make the maximum people bullish. Then you start to see the rollover. So whether or not that happens, we'll have to see. Either way, I'm looking at a market that is going to go down, folks. Again, you have so many signals that the economy here in the U.S. is slowing. We saw retail sales continuing to be very bad here in the U.S. The consumer has driven the U.S. economy. And if the consumer is pulling back, guess what? The U.S. economy is going to slow. And then we know, obviously, foreign governments are making scrambling efforts to try to figure out other ways to invest, not just putting all their money in the U.S. And so all of these signals point to an overall down move in the market. I ultimately do think we're going to go even lower. And I'll show you a couple interesting charts here. So let's just erase these lines here. And I want to flip over to my logarithmic chart here. So we're going to go to the log chart of the S&P 500. We're going to go to the monthly chart. This is one of the scariest trend lines that I have ever seen. This is the high in 1929 before the Great Depression. That trend line extends out to the dot-com high, arguably the next major bubble. And what we see here is we just hit in December and January that trend line again. Now, listen, if you think about what this means, this means that every time we hit this trend line, there is a massive bubble that bursts. In 1929, Great Depression. in 2000, the dot-com collapse. This tells me
Wow.
that this little dip that we saw in recovery, this is not most likely going to be like, oh, that was just a 1 month event
That's
and
a
we're now
scary
breaking
chart.
to the upside, right?
That's
You
a
have to
scary
extrapolate
chart.
that. Right. It
That's
is
a
a really
scary
scary
chart.
chart. And then I want to show you this one too. This one's on the NASDAQ composite. And this one is incredible, right? So
Sure.
let's go back to the regular chart. And what we see on the regular chart is that from COVID lows, there is a perfect, dead perfect parallel channel that literally marked the high and low of every cycle since it started. COVID low, bull market high of 2021, bear market low. And look at what we just hit in late 2024, early 2025, and we haven't retraced down here. That tells me at some point, this has to come back in this level. We're talking 14,000 on the NASDAQ, which again would be about a 30-40% decline from current levels. So again, you know, the charts on the major indices are definitely problematic. They're telling us something bigger is going on here than most investors are aware.
That's crazy. Sure. What about gold? There's two trades that I'm watching in the commodities: gold and silver. So gold almost at all-time highs. Silver is on a tear.
Right. Yeah. So and that's the key, right? Is so silver's playing catch up. But let's take a look at gold first on the chart. So the first thing to note is that you have a trend line that goes through all of these recent lows since basically December of 2024. And so for me as a technician of the charts, I say, okay, this is a very clear uptrend. We keep on coming back to the line, going higher, pulling back to the line, going higher, pulling back. Here we haven't made a new high yet from the all-time high, but we're still in an uptrend. This line has broken. So for me, my mid to short-term outlook remains bullish as long as we hold this trend line here, which currently sits around 32.75 on gold. If by chance we break this line, you then have a shorter term pullback to 31.40, maybe even to 29.50 in the cards. But overall, you know, again, shorter term on gold, this is where it's trickier, right? It's like, okay, you could pull back before you go higher, but I just keep on impressing upon people that central banks have been buying more gold than they've ever bought before. China is buying literally tons almost on a quarterly basis. If these guys are the ones, the central banks are loading up on gold, they're the ones that literally have their finger on the printing presses. To me, it's like, well, I got to hold some gold, right? I mean, it's just like, well, if they're doing it, why wouldn't I follow suit? And also just think about the government, like the US government, there's this big, beautiful bill. We heard all about Doge and cutting massive amounts of spending. And what are we seeing? Well, unless the US economy is like the best economy ever and produces a massive amount of tax revenue, spending is going to go up like 4 trillion in the next X amount of years, right? So governments are just, if you have an election where literally these government officials need to be reelected every 4 years, what's the point of ever taking your medicine now if you need to get reelected? No one will do it. And so again, this is why I'm a fan of term limits, is because to do what's right for the long term means taking your pill, your hardship now, but no politician wants to do it because they won't get reelected in 4 years. And so how do you not like gold when you know the government is going to keep spending?
So you'd be buying gold at these levels. I mean, gold's trading at, I'm just looking at, I can't see the price on your chart, but I'm looking on my chart, and gold is at 3365. You'd be buying gold here.
So for me, I'm a shorter term trader. I'd be waiting for a pullback maybe to 3,000, 3,100. But if you're someone who is not exposed to gold, just like, and honestly, I feel the same way about Bitcoin. If you're someone who's not exposed to Bitcoin, how do you not have that as some of your investment allocation? And it's just more diversification. Like it used to be, you were fine just putting all your money in stocks, in US stocks, and you'd be fine. I don't buy that anymore. I think you have to diversify to other assets. You have to be essentially a smart investor and be diversified in many different assets to protect yourself.
Would it be a mistake buying silver now? Would it be too late? Would I keep wanting to FOMO into silver because I've got some silver.
So I do. So you had this little wedge pattern breakout on silver on Tuesday, and it's really retraced here. That is problematic. What it means for me is, see this level here where we broke out? I think we're going to end up coming back into this level. So I am going to be looking to buy silver when it comes back to about this level here, around $34.50. This, again, if we look at how charts work, we hit resistance, we pulled back. We hit resistance, we pulled back. we hit consolidated, broke out. This resistance now becomes technical support here. I would buy it at 34.50 on a rebase, and we should go higher from there.
All right, so I want to ask you a question. Generally, at the end of the cycle, people move from Bitcoin into altcoins, which I'm sure you know. Have we lost Gareth? Gareth, have we lost you? Are you with us?
Yep.
Okay, so generally at the end of a crypto cycle, people move from Bitcoin into the altcoins, and they try and make up the returns that they didn't get on Bitcoin in the altcoins. And then, you know, in the gold cycle, that could happen around silver. So when people lose or didn't get the returns in gold, they start chasing silver. Should we be concerned that silver is now breaking out? Have we lost Gareth? I wonder.
Yes, in regards, so in regards to the short term on gold, there's no doubt about it that gold has gotten so extended that eventually you're going to have a catch-up trade, just like the altcoins do with Bitcoin. And it's a great analogy, by the way. Fantastic analogy with gold and silver, Bitcoin and altcoins. And so essentially we're now entering that phase of silver being the kind of the altcoin mover, the altcoin bull market. So I agree with you on that. So I am a buyer here on silver for a catch-up trade. I also like platinum and palladium. Platinum's had a huge move, but I do think they need to play catch-up. And it's the same thing with Bitcoin. When Bitcoin runs, people say, oh, Bitcoin's up 100%, 200%. Where can I get some bang for my buck? I don't want to pay up for gold, so let me go to silver, which hasn't run. So I think that's exactly what you're looking for here, and I am a buyer on a pullback to this 34.50 level.
All right, so I'm going to actually go put my buys in at 34.50. Let's go into crypto, because I think that's the reason why everybody... In fact, no, before we go into crypto, let's go into oil, because I think oil is what I call the war line at the moment, right? Like, I think if oil breaks out now, then if you've got that range, exactly the range that you're looking at. And I think that if oil breaks out above this is a downward sloping trend line that I think has been going down since 2022.
Yep.
I think that the top line is the war line, and that if we break that top line, then that means that the escalations are very, very, very serious in the East.
That's right. No, you're right. If we break out from this and confirm above this, that would be something major happening that's way bigger than just Iran versus Israel. Even if the United States got involved, I don't think it would really drive up oil too much more than this area here. So if we get a breakout above this, it probably means that there are many countries getting involved, and we could be looking at that World War III type scenario where Russia gets involved. I mean, there's just so many different possibilities here. Having said that, to me, I keep coming back to, well, number one, the U.S. is virtually independent in terms of oil and energy. So that, again, will drag oil or keep it under pressure. And then also the U.S. economy slowing. So demand is coming down, and OPEC has continued to say they're going to raise production, right? So least, and then if it does, I mean, we could be talking about, I mean, if really we saw most of these countries in the Middle East getting involved, we're looking at $100 oil, probably back to this double top at 95.
So you're looking for $77. If we break and close above 77, then you're saying, and you agree with me that if we do, then we can expect risk markets to drop. Like we can expect the S&P and Bitcoin and all the other risk markets to actually drop.
Oh, yeah, absolutely. Because not only the escalation would be something massive here, but also think about this. Look at, so we know we got the US CPI data about a week and a half ago, right? And the last day that the CPI data was recorded, which was the May reading, was right here when oil was $60.60. Well, guess what? We have oil now in this month at 75. So think about now this, right? We were just hearing from Jerome Powell how he's expecting inflation to go up. Well, just in the last 2 to 3 weeks here, we've seen oil go up. Let's see here. It is now currently up 24%.
Holy moly.
So think about the impact on next month's CPI data just the oil move alone is going to have. And so you have escalation plus you have higher inflation potentially here in the US.
That's worrying. Okay, let's go into, I know I've got you for very limited time, so I'd love to get your thoughts on Bitcoin and then ETH, Solana, and the altcoin. So where are we on Bitcoin?
Yeah, so Bitcoin is struggling here. There's no doubt about it. Stock market is struggling. And so I know a lot of people will say, all right, Bitcoin is not a risk asset. I disagree. I still think it is. We have seen key points, and this is really promising for Bitcoin. And I continue to be a long-term bull on Bitcoin, but I'm also a trader. So I go long and short depending on what the charts are saying. But when we saw the April 7th stuff going on, that April 7th low, a few days before, when people were panicking that yields were jumping because buyers didn't want to buy US debt and the dollar was not reacting as it should have, we saw Bitcoin starting to move, right? And so that shows that in extreme fear scenarios over the security of the US dollar and treasuries, Bitcoin actually is a store of safety. But then as soon as that kind of goes away, Bitcoin starts following the NASDAQ again, essentially. And so really looking at this chart, right, we have this upsloping trend line. We're right on it. If this breaks, if we break basically below 104,000, I think we trade back down to about 96 to 93,000. This area right here, very clear. You could even extend this even outside into this area as well, which is major support. So again, for me, my shorter term outlook is very much coordinated with the stock market. Just because that's the way Bitcoin tends to trade. The only other chart I'll show you, and this is one that I would caution people is a little concerning, is that if we go to our Bitcoin chart and we go back to 2017, right? So here's your trend line. This is what's keeping Bitcoin from really having that next move. So I know we always hear the 250,000 price target by year end. We hear the $1 million from, whoever, but this is the trend line that traders need to watch. Your high from 2017 bull market through your highs of 2021. Look at how we hit it perfectly here in December, perfectly here in January, and then we've come up just shy of it here. So for me, this trend line is the top on Bitcoin until proven otherwise. Now, it can be broken, but until it's proven otherwise, meaning it breaks out, I have to respect the hell out of that line.
Wow, scary. What about altcoins? So I know you watch ETH, I know you watch Solana. What are the ones that you're actually watching?
Yeah, so ETH is a great one, right? I mean, ETH has been doing pretty well since again, basically May. We had that big move up. ETH in the short term, as long as it holds this trend line, is fine, just like Bitcoin. But if it breaks below here, you probably buy it on a $2,100 price point. And that's actually where I have my order to start to accumulate some long on ETH right down here, this former major pivot. If we break this upsloping channel, we should go right there, and that would be your first stand. Then you'd have additional support around 1,800. But I actually continue to like ETH. I think, again, it has a place in the future. Obviously, Solana's eaten some of its lunch. But for the most part, I think at these levels on these pullbacks, it does look interesting. And then Solana has been obviously doing relatively well, but same thing. It's stuck in this little bit of a same point. Look at this trend line. Again, notice it keeps hitting and hitting. If it breaks here, we could revisit $100 on Solana. So again, listen, if we can break out 180 to 190, you break above that, you're off to the races. But that for now is your top on Solana. We got to see a breakout on that.
Amazing. Gareth, listen, I know we're out of time. I know you've got a hard stop. So thank you very much. It's so good to have you back on the channel. Usually we can't have you back because our times don't correspond. You're streaming at the same time that I'm streaming, but it's great to have you back, brother. And again, thank you very much. Much love from everyone here at the Banter Fam.
Yeah, same for you guys. I love you guys. You guys do great work, great coverage on everything crypto related. And it's an honor to be here with you, Ran. Seriously, man, I hope we get to do this more often.
We will, brother. Thank you very much, guys. Thank you. All right, guys, that's Gareth bringing us an amazing and balanced outlook. Like sometimes in crypto, you want the markets to always go up and you don't want to listen to the other side, but it's important to hear the other side. And I mean, those lines are compelling. Those top lines that he drew are super compelling. Anyway, I will see you guys again on the weekend if anything happens. We're obviously watching the war. And otherwise, I'll see you guys again on Monday. Until then, stay safe and trade well, my friends.